So today we're going to go over what the S Corp election actually is and whether the timing is right for you and your business, because that's something that comes up a lot. The difference between an owner's draw, a salary, why it matters for taxes. There's a really big tax distinction here. How payroll taxes work once you've been running payroll as an S Corp or an S Corp owner, and what that means for you come tax filings, when to start payroll and what to factor into that before you do, and how Gusto fits into the setup process and what getting started looks like in practice. We love Gusto. We use it for our firm. We use it for about 98% of our clients. And by far, it's one of the best payroll options out there. One of the main reasons we like it is a lot of payroll options, kind of like accounting software options, are relatively the same, right? You're going to be plus or minus a few dollars. The functionality is relatively the same, but what it comes down to is when something goes wrong or you need help, Gusto has direct points of contact. They have a really robust support team, and they have been there whenever we need them to help with anything, which is why we like working with them so much. So what an S Corp election actually is and what it's not. So what it's not is a new type of business entity. And a lot of our clients get confused, rightfully so. And they think, when they get a question or like a W-9 that they have to fill out, oh, am I an S Corp now for my entity? Like, am I a corporation? Am I an LLC? What am I? For most of you, you are an LLC and you have an S Corp election that you can overlay. And so you can overlay that as a tax type. You can also overlay it if you're a corporation, which isn't super common. We have a couple clients that were a corporation first, that again, you can overlay this taxation election and it can be removed at a later date. Now, we're not going to go into removing and what that looks like because that's not the conversation for the day, but it's not a new business entity. It's not something that you form. It's an election that you make. It is not required for everyone and every business, and it is not automatic when you form an LLC or a corporation. An LLC by default, if there is one owner, is what's known as a disregarded entity, which is a sole proprietor, single member LLC, etc. It basically means that yes, you have an LLC bubble, but from a tax perspective, your business returns still get filed as a part of your tax returns in your 1040. Versus if you have multiple members, if you elect to be taxed as a corporation, if you elect to be taxed, again, elect to be taxed, versus your legal entity does not change. You are an LLC, you are a corporation. Your tax election is what can flex and change. What it is a tax election that you file with the IRS. You basically tell the IRS, hey, we're like this. We want to be taxed like this. It changes how your LLC's profits are taxed. And it's a really great financial strategy, tax strategy. It's one of the highest tax saving strategies for the right situation for a lot of our business owners. So it's one that you can choose when it makes financial sense. And it's the reason that distributions aren't also taxed with self-employment tax. And that's something we'll chat about in depth further later on in this. But what I want you to understand is for most of us, when we get our tax bill and we look at that grand total, it's multiple different types of taxes in one. There's normally self-employment tax, which consists of payroll taxes. It's, FICA, Social Security, Medicare, federal unemployment, state unemployment, all of those rolled into one. And it's income taxes. An S Corp election does not save you on income taxes. It saves you on self-employment taxes, which we'll go through some examples of what that looks like in just a minute. So when does the S election make sense? Now, for a lot of you, you may be, kind of around that $50,000 mark, profit, not income. And profit for this scenario is income minus expenses. The expenses do not include what you've been paying yourself. And if you want a quick way to look at that, look at your Schedule C from last year in your tax returns, look down at the bottom, and there will be like a net income line. That net income line is something worth looking at. If your net income is increasing or you're expecting it to be above 50,000, then it might be worth having a conversation with your accountant or your tax professional or us if you don't have one. And so what to be looking for here? The administrative costs really, when you're under $50,000 a year in profit, payroll service, extra tax filings generally outweighs the savings at that point. There are a few really, really niche scenarios where maybe you're working less than 5 hours a week and you're working seasonally, might be worth it. Again, but it's worth checking. And when we talk to people about an S election, we actually run real-time numbers with them. So before you ever decide to make the S election, what your forecasted savings are after added administrative expenses like payroll, like the tax filing, like the S election. The real place where we see people coming in where it's a no-brainer, but maybe they have some confusion around, can be that $50,000 to $80,000 in profit per year mark. This is where it can really start to make financial sense. Again, run the numbers with your accountant, your tax preparer, because that's where, again, depending on cost of living, how many hours you're working in your industry, you can start seeing anywhere from like a $5,000 to $10,000 savings in this window. That savings goes up dramatically when you are making more money. So if you're making $80,000 plus in profit a year, this can make a huge difference. We've had, clients save $20,000, $30,000 on self-employment taxes when they're making, $150,000, $200,000, $300,000 a year in profit. And so the ideal here is you've hit that 50 to 80,000, or maybe you're 80,000 plus, and it's time to make the transition. If you expect your business to keep making this much or more in profit over the next few years, if it's just going to be one really great year, depending on the year, it may not be worth doing all of this unless you're making like $300,000 this year, and then it probably is, just to roll it all back, close all the payroll accounts. It can get a little bit expensive and potentially cost prohibitive for the average business owner. Now, something that comes up a lot when you're a single member LLC, a sole proprietor, which is what we have on the left here, you're generally taking owner's draw. You're not paying yourself a salary, even if you call it a salary. A salary is through payroll. And so all profit with a sole proprietor, single member LLC flows directly through to you. Whether you take that money out of your business bank account or not, you get taxed on the profits, whether it's paid to you. 100% of that profit is subject to self-employment tax, which again is roughly 15.3%. It's a lot. It's why so often people are like, oh my gosh, I'm paying like 30 to 35% in taxes on my income. That's because you're paying income taxes plus you're paying this. When you are traditionally employed, you pay half of that and your employer pays half of that. So you're roughly paying 7.65%. And that's what you see on your paycheck as like FICA, Social Security, Medicare, etc. Your employer matches that on their end, and then you're still paying your income taxes. So again, this won't save you on income taxes. And with the sole proprietor, single member LLC, no payroll is required unless you have employees other than yourself. And again, it's really, really simple. There's one filing deadline. You file with your personal returns, the administrative, like management side of it, the bookkeeping side of things. All of this gets to be a little bit simpler, a little bit less rigid. And that's something for you to consider, because even if it makes financial sense, if you can't keep good records or you're not able to really be on top of this, it still may not make sense for you to transition to an S election. Now, with an S election, you have salary and you have distribution. And so your income gets split into two buckets when we're thinking about this. So salary, you have reasonable pay for your role, which is subject to payroll taxes, this 15.3%. You have distributions. This is your remaining profit, whether, again, you take it out of the business or you leave it in there. That is not subject to that 15.3%. That's where the savings of the S election comes from. Now, that again does not save you on income taxes. All of this still passes through to you. You still pay income taxes on it. But that 15.3% can add up pretty quickly. It does require running payroll. And again, it is more complex, but for the right business situation, the savings can be absolutely massive. Here's a prime example. So this is the actual math in action here, right? Jamie's a luxury photographer. She has $185,000 in net profit after expenses. So example one, she's a sole proprietor, single member LLC. All of that is subject to self-employment tax. That self-employment tax is $28,305. There's not much we can do here. There's a higher total tax bill. We do have a few things, like making sure you're writing off things in a higher income tax year, making sure that you're maxing out your retirement where you can. Any of those items can really help with this. But at the end of the day, you don't have nearly as much flexibility when it comes to your tax savings. Now, you do have with the S election, again, this is the same total amount, right? 80,000 and 105 is the 185. But in this case, we split it into two pieces. Reasonable salary, and this is just an example. It will vary for you depending on industry, location, hours worked, job responsibilities, etc. But let's say that a reasonable salary is $80,000 and owner's distributions. So again, everything that's not salary, the remaining profit is $105,000. You're only paying the self-employed tax on that $80,000. Your estimated savings is $16,000. You're paying significantly less in taxes given that example. That more than pays for the extra returns, the extra payroll tax filings, the extra administrative costs. That's a massive savings. And that's every year that you make that, you are saving it. And if you made more than that next year, then you'd be saving more than that, assuming that your salary stayed the same. So how do payroll taxes work when you're the owner employee? And again, you wear two hats here. And so it can be kind of weird when it's been you, yourself, and you in your business. And then all of a sudden it's you yourself, but you yourself as a business owner and you yourself as an employee. So as an S Corp owner, again, you're both the employee and the employer. You pay yourself a salary, which we looked at on that last slide, and you're withholding payroll and income taxes, just like any other employee would do. What gets withheld from the salary? Federal income tax, state income tax if it's applicable, Social Security, Medicare, FUTA, SUTA, etc., which is federal unemployment, state unemployment, potentially, and your business pays the employer's matching share of Social Security and Medicare. Again, you as the employee are paying that 7.65%. Your business is paying that 7.65%. Now, distributions are different when you have payroll. You do not want to take distributions or profit out of your business above and beyond your salary through payroll, because that's going to tax them. And you don't want that tax because that's the whole point of the S election. That's the whole point of having those payroll tax savings. So instead, you're going to move that money to yourself via an ACH, an online transfer, a check, whatever works on your end, but it does not run through payroll. And again, it is still taxable income. It's just not subject to self-employment tax. Now we're going to touch on reasonable salary because this is the big thing that comes up a lot. What should I be paying myself? We have clients that pay themselves anywhere from $24,000 to $120,000 per year as a salary. This varies, again, dramatically. Are you working full-time year-round? Are you in a high cost of living area? What would it cost for you to hire someone to do the roles that you are doing in your business? And you need to look at that. I really recommend looking at something like Indeed or looking at what you've paid other people to do various parts of your role, maybe when you've hired contractors or team members. And I like to assess this at least once a year. I normally do this in January. I do a little time study. It's not my peak season, but it's not my slowest season. I look at the total hours. I look at what it would, like how I'm spending my time, what it would cost to hire out. And that's what I base my salary off of for the year. Again, this is not a loophole to abuse. Paying yourself $1 doesn't fly by the IRS. They can come back, and if you're paying yourself under $24,000 to $30,000 without a very good documented reason, there's a very good chance the IRS will scrutinize. They will then say, actually, we think that $60,000 is what you should have been paying. You're then going to owe those back payroll taxes plus late penalties, filings, etc. So again, this is a really great tool for you to use, but to use responsibly, and make sure you have documentation if the IRS does come knocking and wants to know how you got to this amount that you justified for yourself. So how do you do this? How do you start payroll? Where do you factor things in at? So you want to start have a conversation with your accountant, your tax preparer, which may be us. Chat through. Does this make sense? Are you at the point where it's justified? How many hours are you working? What do you think a reasonable salary would be? We can run the numbers on that and give you an estimate and say, hey, green light, that looks great. We go for it. Or, hey, you may want to wait. You can generally do a retroactive S election. So S elections are due by March 15th of the year. So for 2026, they were due by March 15th. We regularly file, because you may not know what your year is going to look like in March, we regularly file S elections after that date, which are called late S elections. There's not a fine or a fee or anything else that goes along with it. You just go, hey, I didn't know this was an option. I'm going to do everything that I need to do. Will you please accept this? And 9 times out of 10, the IRS is like, yep, you're good to go. It is very rare for them to deny it, but there is a possibility it could happen. So I want to throw that out there. And once you get that approval from the IRS, you want to then set up your reasonable salary, determine it, set it up in Gusto or whatever payroll service you want. Again, we love Gusto for so many reasons. and you add yourself as an employee, you set your pay frequency. We really like biweekly or even like semi-monthly. So I really like semi-monthly because your paychecks stay the same every month as far as what dates they fall. It can make it easier for budgeting. Some of our clients like monthly, some of our clients like weekly. Really do whatever's going to work with your personal and household finances the best. And you can change it if you don't like it. There's nothing that like makes you set in stone on this. You get it all set up, you run your first payroll, which feels a little bit backwards. Then that lets you go set up all your state payroll accounts, your unemployment insurance if you need to. Some states, if you're the only employee and owner, you don't have to. Some states you do. And make sure that you are all set up with your payroll, unemployment, etc. with the state. So getting set up in Gusto, you create the Gusto account. You have to have your EIN. Please make sure it's correct. If you don't have your EIN letter, call the IRS, ask them to mail it to you. It takes a couple of weeks. It is well worth you having. You want to have a bank account that is in your business's name, and you want to have a business address, either a physical work location and or a mailing address if those are different. You enter all of your company information, your pay schedule, etc. You put placeholders in for the payroll tax registration info until you've run payroll. You add yourself in there and your reasonable salary amount. You configure your federal and state withholdings, which is different for everyone. Connect your business and personal accounts, one for your payroll to be withdrawn out of, one for your payroll to be direct deposited to, and then you run your payroll. And it runs pretty seamlessly. A lot of our clients set up their payroll on autopilot in the back end and just let it run. And they may pause it during their slow seasons. They may decrease total salary during their slow seasons, or they may go in and run it manually every time they need to. It's really up to your personal preferences and how you want to operate with your business and what your cash flow looks like. So again, key takeaways here. S-election does not create a new entity. It changes how your existing LLC is taxed. The savings are coming from your distributions, your remaining profit essentially not being subject to self-employment tax. Your salary is still taxed normally. Your salary has to be reasonable. You can't set it artificially low in order to minimize your tax burden. The elections normally make financial sense anywhere from $50,000 plus in annual profit. But again, chit chat about your specific situation, because it may be that you need to make $100,000 in profit for it to make sense for you if you're living in LA or San Diego or Seattle or Portland, higher cost of living areas. Payroll is an administrative function, but services like Gusto really do help make it manageable. It's not as big of an ordeal as it can be. And frankly, I've been through ADP, I've been through Paychex, I've been through QuickBooks Payroll. It is far and away, I think, the best payroll option to be using, and it's the one that we use for our firm. And getting the timing right on your 2553 form matters. Don't DIY the election, especially if you have a spouse. You have to make sure that things are really nailed down on that. Even if you decide you want to tackle getting your payroll set up by yourself, have a professional do your 2553 form to actually make the S election. So as a reminder, if this is like you're so ready to do it, you want to chat about what the savings could look like, if it makes sense to you, you know how to get a hold of us. I would love to talk about it. You can send us an email.
That's a wrap for this episode of the Wealth Witches podcast. I hope our magical money talks have left you feeling empowered and inspired. Remember, wealth isn't just about dollars in the bank. It's about abundance and financial freedom in all aspects of your life. I'm Katelyn Magnuson, encouraging you to keep challenging the status quo and embrace your inner witch on this financial journey. Until next time, stay magical.